Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at something incredibly interesting, and that is something that we've been looking at with the pi cycle, but from a slightly different angle, and ask the question, is the green line of the pi cycle giving us the clue, the trigger, the signal that we have now come to the final hurdle before the green light to get to the top of the bull market? I'm going to show you something incredibly interesting over the last 3 cycles of what happened and why that seems like a very probable case. I'll also be bringing you up to date with the ETFs and exactly what's happening with the inflows into the ETFs over the last week or so. I'll have a look at the wider markets to see exactly how the influences are on the Bitcoin price over the coming weeks and months, as well as look at the 60-day cycle and my insights into the strategy for swing trades as well as for long-term holders. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any important investment decisions or any swing trade decisions. And before I get into the main part of the video, I just want to talk about certain few ideas that are going to help us from the attitude point of view. And I'm going to refer you to this particular quotation which I've shown you in the past, and just want to remind you to keep an open, fluid and flexible approach to the markets. The markets are not a black and white, yes or no, right or wrong, up or down. The markets are a complex animal where you have to look at things from outside the box for most of the time, and it requires a huge amount of emotional intelligence. So what I'm really doing is appealing to everybody that please keep your attitude correct in terms of the market. Always remember, not just in the money markets, but in life in general, your attitude will always, and not your aptitude, that will determine how far you go in life, your altitude. And once again, I want to bring you to this wheel of life. We're obviously in this sector here, in the finance side. However, life is not just about money, it's about your personal growth. It's about your health and fitness. It's about your family. It's about your relationships. It's about the people around you. It's about your career. You spend 1/3 of your day in your career. So these are all important areas, but you will not be successful in any of these unless you get this correct. This is what you really need. Without a good attitude, you're not going to do well in your career. If you have a bad attitude towards finances, you're going to really not have much money in your pocket. And without a good attitude, or the right attitude, the correct attitude to be in line with your personal growth, you ain't going to get any of that. And if you have a bad attitude towards your health, the chances are you're going to lead a very unhealthy life, etc., etc. And this thing called attitude is one of the greatest determinants of where you get to in life. And the quicker people can get their head around that, the better. So coming back to the attitude regarding the finances and how to read the charts and how to actually look into the charts, what is the right attitude to have, and not to have a clear black and white, right or wrong, up or down. Take that out of your system, because that will give you emotional turmoil and lead you to making bad decisions going forward. And before I go into the right attitude to determine your financial outcomes in life, while we're here, I would urge everybody to look at this wheel of life and to work on it, and to work on yourself in every area of this. Because by doing little by little, every single day, every week, every month, you are going to be in the fast lane of life. Instead of being on the slow roads, the B roads of life, you're going to be on the super highway, the motorway of life. And this is from a personal experience over the last 30 years of following this particular template. So just to give you some idea about the right attitude, by just keeping this in mind, and that is, always keep an open, fluid and flexible approach to the charts. And I'm going to just refer to only one point here. You can read this article yourself. If you go down here, in order to elicit the greatest value from all of the videos that you watch, always remember that this is debunking the myths around technical analysis. That technical analysis can provide precise price predictions. So this article is debunking that, because it is absolutely not true. Technical analysis or any analysis cannot give you precise price predictions, because nobody knows the future. Nobody has a crystal ball. But what you can do with technical analysis, and in a nutshell, what this article is really saying, and is something that I've been talking about for the last 4 years, and that is that technical analysis is all about probability and likelihoods, not guarantees. So I urge everybody to keep an open, fluid and flexible approach approach to the charts, and that will help you to be very effective at generating profits. Okay, moving on to the title of this video regarding the final hurdle, that have we finally got the green light from the green line, and I'm going to show you why that is the case. So as you know, in the last few weeks I've been looking at the pi cycle, and if we start off with this first cycle here, I'm going to show you something incredibly interesting about the pi cycle, but from a different angle in terms of triggering off the beginning to the end of the bull market. So looking at the first cycle here, once we'd bottomed out, we came up to the red line and then we came to the green line, and that was something that was going to be repeated for the next 3 cycles, including the current cycle. So I've shown you this in the last few weeks, so I don't want to go through all that again, but what I want to show you is that this particular signal, that once it came back to the green line, that was the final hurdle before you get to the top of the bull market. So this is the first cycle. It was only when we hit the green line here one more time, irrespective of whether we went a little bit lower or not, once we hit the green line, that was the catalyst, the interaction of the green line after the halving. So the interaction of the Bitcoin price from the red line to the green line, once we hit the green line, that was the catalyst which took the trajectory of the bull market from this angle to this angle here. So this was really the final signal. Yes, we go sideways a little bit, but if you're looking for a signal to get in to make sure that you don't miss out, this is your final signal to either get on board and not to miss this big move here. And if you go to the second cycle, exactly the same thing. After the bear market, we went to the red line here. After the halving, we make an interaction with the green line with this candle here, irrespective of how far it goes below it. But that is the last trigger, the last signal to take you from this trajectory here with these support lines. And once again, you can see it went sideways for a little while there before the big move started coming here. So the trajectory went this way, and it looked very obvious in the second cycle, because what we see here is that the green line became the most successful support lines right to the top of the bull market here. And you can see the trajectory, once we'd hit the green line there after the red line, the trajectory changed, and exactly the same thing happened one more time. After the red line, after the halving, we came back and hit the green line one more time. So that's the third time after the halving the price has come back to the green line, and the trajectory lines are even more pronounced here. From this point, you can see that as soon as it hit the green line, that was our trigger after the halving, and instead of going sideways for a while, it just went upwards straight away. So the trajectory changed exactly after the green line here, and that's why you can't really take risks. And as I mentioned many times in the past, it's more riskier to be out of the market than in the market. If you're waiting for prices like here to get down to these levels, the market's not going to give you that, and instead it will run away from you. And here we are in the current cycle, exactly the same thing is happening one more time. And now after the halving, with the price coming back to the green line, having bottomed out here and then hit the red line here, we've come back to the green line one more time, and this time again is after the halving. So that's 4 cycles out of 4, and this was our expectations. So before we hit the green line over the last few weeks, as I've been mentioning many times, that based on the previous 3 cycles, the higher probability was for the price to come back to hit the green line. That was our expectation, and it's done exactly that. And if it hadn't have done that, then that would have made it 4 cycles where 3 of them hit the green line and 1 didn't. So that gives you a 75% probability. So it's not a case of being right or wrong, it's a case of the probabilities playing out. So what is this signal telling us now? Well, once again, the trajectory which we've had over here, we have to assume, based on the previous 3 cycles, that this signal here, with the price action hitting the green line, this is the trajectory is going to go this way. How far it will go, we really don't know, but certainly this trajectory here is no longer valid, because as we've seen in the previous 3 cycles, once you hit the green line, the trajectory for the price goes into the parabolic phase of the bull market. So this is where we are, and this is what our expectation is. And as I've shown you with the article, these are all about probabilities. Based on the previous 3 cycles, the probability is, the higher probabilities for this to go to this side here now, to take this trajectory. So there we have it, with the green line providing the final hurdle before the trajectory of the Bitcoin price starts to move to the upside here. And this is why I say that it is better to be in the market than out of the market. That's my strategy. And this is where the trajectory of the Bitcoin price could quite easily now start to go into this direction from this direction. Okay, we're going to move on to the ETFs and what's going on in the background determining the price for Bitcoin. And as we know with the grayscale, the outflows have been going on now continuously since 11th of January. So that was when we had the approval for the ETFs. And ever since then, as you can see with these bars here, we've been having outflows every single day up to the 3rd of May. And this is the first time we've got an inflow into the grayscale exchange. So this bleeding that's now stopped with the grayscale, and we've now got the first net inflow since the launch, and the amount that we've got in for the first time was $63 million. And that was on the 3rd of May. And considering that we've just had the halving where the number of Bitcoins produced by the Bitcoin miners has gone down from 900 per day to 450, and the same thing seemed to be repeating over and over again, as we've just had a pullback down to 56,000 while the retailers have been selling because of fear, as they normally do, time and time again, the smarter investors, the larger investors, they've been buying 47,000 Bitcoin during this pullback. So if you want to be successful, you need to be following these guys here. And as we can see, if we scroll down, look at their activity in the last few days. They've been really active in terms of buying up this dip here, because this may well be the last chance before the big move coming up. Now, it's not all plain sailing with Bitcoin, because what we've got here is the liquidity leverage map, and this is telling you that the long positions with leverage is very heavy down here at this point, and that yellow zone is at 63,400. So there is quite a high likelihood that the price for Bitcoin will pull back from the rise that we've just had into the 65,000. There is a high likelihood that we'll pull back to 63,400 to take out these leverage players here before we move. And there's obviously the short positions at these yellow lines here. So there's still a bit of cat and mouse going on with the Bitcoin price and the leverage players. Okay, moving on to the wider markets. If we have a look at the SPX, we've been looking at the SPX through the lens of the 60-day cycle. And what we got here was the 60-day cycle low here, and we got the SPX going into the 60-day cycle decline here, and it's extended that to this particular candle, which is now on day 72. So far, it looks, with all intents and purposes, for this candle here to be the start of the new cycle. And the reason why I say that, and once again, it's all about probabilities, and usually a bottom will be confirmed when you break the previous high over here. And what we got on Friday was a close above the previous high. Now, it would make sense to wait for one more candle to confirm the break above this level here. So let's see what happens today. But certainly this is looking like the start of the new cycle. And our first target down here of the 5,000, the action around here has been quite bullish, because whenever you lose a support line, but if you immediately recapture that, that is usually a bullish sign that we're going to go much higher. So that itself is also telling us that we're now in a new direction to the upside. And the danger to that is that this is just a counter trend rally that you normally get after a big fall down here. So we'll just need to be aware of that this is not just a trap, because if it does reverse back down below these levels here, then it looks like it may have another leg down and become an ABC correction. There's a less likelihood of that. This is more like a continuation pattern to the upside rather than an ABC correction to the downside. But let's see how this pans out. Always keep an open mind about this. But certainly looking like good ominous signs for this to be the start of the new cycle and the end of the previous cycle. And moving on to the dollar, we've had this green line now for quite a while. And as I mentioned, with these two indecision candles at the top in the last 2 weeks, this was a loss of momentum to the upside. And what we got at the end of last week, this weekly candle, is a formation of a bearish candlestick pattern. And that is what we call an evening star. And as we can see, the examples of an evening star pattern here, green candle here, a small indecision candle at the top, and a right red candle here. And technical analysts here would be looking at this, consider selling or shorting this in anticipation of an upcoming decline. So you would expect this to now fall to the downside. So this is what I would expect the dollar to be doing coming down here. Okay, I'm going to move on to the 60-day cycle for Bitcoin. And from the previous cycle end here, we seem to have bottomed out on day 42. And currently we are on day 47. And if you look left here, we have had cycles end on day 43. So this is not out of the realms of possibility to have bottomed out here. So this is a possibility. We are having a counter trend rally back up, and as I've mentioned many times before, we need to get above this 67,000 line to confirm this bottom here. We haven't quite got there yet, and it's quite conceivable we get rejected here and then keep going to the lower side, because what you've got here at the moment, while the price action is still looking quite bullish, we're not really out of the woods yet, because what you've got is lower lows down here and lower highs over here. So it looks like we've just broken out of that trajectory, that trend line at the moment, but we are finding some resistance at that point. So let's see what happens. But certainly the signs are looking good that we are moving to the upside, but there are still some hurdles to go. The biggest one here is the 67,000. Until we get above that, we can't really confirm this cycle low here. And while that's the case, this has certainly still got room to the downside into this 60-day cycle low that we've got marked here on the 19th of May. And if we put the pi cycle on one more time, we can see that it came and found support exactly on the green line. So this was what we were talking about when we hit the red line, that the chances are we're going to come back and hit the green line at 57,000. This is exactly what we did. But because it broke this trend line here at the 60,000, the expectation was to come back down to this cluster of price action here. So this was our target from last week, to see whether it will come back down to between 50 and 52,000. So while we're having a little bit of a rally at this point, this target down here is not off the table yet. And this will only get off the table once we get past the 67,000 and get some sort of a confirmation to the upside. So until we get above that, this is firmly still on the table. And I mentioned in last week's video that the probability of it reaching the 52,000 from this point here, when we broke the 60,000, the probability was around 60% to 40%. So 60% in favor to go down here and 40% to do this. So always think what that means. It means that the 60% didn't play out, but instead the 40% is playing out at the moment. It's not a case of being right or wrong. It's a case of probabilities playing out. But that doesn't mean that this may not do this and come back down to these levels. So only time will tell, but keep an eye on this. And I always want to remind everybody about the journey that we're on here. This is the last final phase of the journey. We started the journey down here with the Bitcoin miners. We've captured this bit here so far from 15,000 to 70,000. The equivalent of the Bitcoin miners was for Marathon from $3.11 up to $34. So that's what we've captured so far, although there has been a correction for the Bitcoin miners of around about the 50% mark. But obviously with the Bitcoin miners, they're a much more highly volatile play with the Bitcoin because they are a leverage play. So when Bitcoins come down by 23%, the Bitcoin miners came down between 50 and 60%. But on the reverse side of that is that when Bitcoin goes up by 10-20%, the Bitcoin miners go up by 40, 50 and even higher percent. And if the Bitcoin miners and the volatility is of interest to you, then all you have to do is to click the join button below any of my videos. And you can join us for the next members video on Wednesday when I'll be looking at more opportunities with the ratio trades. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.